Fidelity Fortune Hunters, Tom Wilmot speaking. We're going to take a detour today from our typical Forex discussions with MetaTrader, and we're going to zoom in on Fidelity Active Trader Pro. That's the trading platform used by active traders with Fidelity accounts, and in particular, we want to focus in today on options. And we'd like to particularly look at how you make sure your limit order is engaged so that you're paying the price you want whenever you get into either an option, a put call, or a spread of some sort. So hold on to your hat. We'll get right to it after this. Okay, everyone, we're looking at a Disney daily chart. Disney has obviously made a big move upwards in that last reporting period in April when they announced their streaming service, and the stock took off on great earnings. And also the Avengers purchases that they've made have paid also great difference in stock price and potential additional revenues in the future. So let's take a quick peek at how we're going to use the Disney chart to evaluate some options and potentially enter some orders here. So those of you who've watched these videos in the past know we can shorten up our chart here by pulling over this particular line with that sideways thing, and if you'd like to adjust up or down, there's that one, and you can bring it down or move it up any way you'd like. That gives us a better picture of what's going on. And obviously right here, we also have our RSI in place with our 45 to 55 band I like to use. And notice when we got the pullback after earnings down into our bands, our EMA bands, we had a nice hold right here in the middle of that 45-55 before we took off again to the upside. So bottom line here is we love to use these moving averages, the multiple moving averages, and we look for those slingshots upwards when we have some what I call compression of the bands. Notice how they're compressed here, and that creates the slingshot approach as you're moving forward in time. But enough of that. Let's take a look at what we've got going on here. Now, if you want an options chain, you can click up here, an options chain, and then select from it. But let's see what I had in my tool bag here. We have some option chain Disney calls. So let's take a look at that now. We'll bring it up, and we'll take a look and see what's going on. Now we have, in this particular chart here, let's go back up top. Because we have this box highlighted August 16th, we start there. If we wanted to see the options that are expiring tomorrow, by the way, this is July 25th when we're recording this, there is a weekly option expiration tomorrow on the 26th, and if we clicked here with our left click button, we could see that and it would pop right up, and you can see that this would be an interesting area if earnings were this week. Now, earnings happen to be next week, and notice this is the symbol that you'd see in Fidelity to give you an alert about that for your options expiration and so forth. So perhaps you'd like to maybe look at the August 9th expiration area to see if you had, excuse me, a run into earnings of some sort. Okay, so now we're going to take another look. We're going to get rid of this July 26th expiration. That's a little close in. We're going to focus on this August 9th to August 16th period. And in fact, let's pull this down again. So we grab the top bar on our options, and we see that actually today we're at 142.34. And in fact, see, we did pull back into the bands here. So an entry down in this area would be very useful. Here's a 50-day, I think may actually have put in a 47 EMA, no problem there. You can see here are your indicators. And if you'd like to modify any of those, simply left click here and you get modify, delete, or add another indicator. So in any event, this is one of those kinds of potential pullbacks into the bands under the 24 EMA and then a reversal to the upside. So this is quite a strong looking chart. The all-time highs up here around 146. And so therefore, we'd like to see what our options chain could deliver. Now, if you wanted to take a look, you could choose some kind of a strike price down here in this 139, 140 area. So let's just see what we got going on here with that. Once again for the August 9th expiration. So if we took 139, our options are 560, 580, bid asked. The high for the day and the low for the day are right here. You can see it did reverse upwards from the low this morning when the market opened. And over here we see I have IV and delta and theta. Notice here I'm trying to take a look at that 139. It just happens to be up around 70 delta, and that means you'll if you're not a big freak of the Greeks, then you're in a situation where it's very simple. It's about 70 cents for every dollar of price movement when you have a delta at 70. These would obviously be out of the money calls down in this area here. So notice also open interest and so forth. Now let's take a look at that 139. Notice here we have this little tab, which is the menu bar, and we're going to left click on it, and we have all of our choices here. And so let's say buy to open, just to see how this all works. Here comes up another pop box, and in this particular case we're buying to open. You can confirm here. Let's say we want a 1, and we plug that in, and we have an order type which is a limit. And obviously we'd like that limit case. Now notice here bid ask is down here, the volume. So if we wanted to be patient and put in our our offer at the bid price, that's what we would do. So let's do that. And you're in complete control then. You have an opportunity now to preview this order before it's entered, and you can edit it here as well if you don't like it. But this is a great way to come back. Now notice this is a limit order on this option to buy, this call, and so therefore it's pretty straightforward. Now we're not going to enter this today. We're just taking a look at how these things work. And let's change now and move over to some kind of a spread. So down in here we have butterflies, we have strangles and straddles, but vertical spread is one most people know. We could sell a put credit spread, for example. And let's see again if we think that will hold that 139 level. We'll click here. We'll come down to vertical spread. This will give us our offsets. Now you can choose the width of your spread right here. So you can go up to 5, or you could do a custom one for sure. And if you wanted to limit your risk, you could make it 2 to buy your protection, just $2 off the strike. And so that's the way that works. So let's go in here for 5 just for fun, and obviously the pricing will be different. And let's go back now and say that we think this thing will hold above that 139 level. And in this particular case, it's interesting, we get about $1 worth of credit for every one of these spreads we sold. And so what we're going to do here, this would be to buy a call debit spread. This is the side here that would be calls. Here is your tab for the put credit spread. Now what we're suggesting is that it'll stay above 139, and our protection would be to buy a put at 134. And as I said to you before, we can adjust that right here. Let's say we only wanted $3 worth of risk. Then we'd be in a position where we come down here to find it again. Here's our 139, 136, and you can see that because we've limited our risk, we've also limited the credit that we're going to receive. Okay, so we've decided we don't want to limit the credit we're going to receive, so let's maybe compromise a little bit. Let's go back here to our offsets, and let's choose 4. Anything is possible. You can just adjust it as you see fit. Now notice that when we get here, obviously Disney's also been headed up while we were talking here today, so that we're losing money by not having taken the trade earlier, because as Disney increases, obviously the credit we'd receive would probably go down. Now here we are with a 4 offset spread, and we've got 91 to 98 to 105, so it's pulled back apparently a little bit just in the last minute or two. What we'd like to do now with this 4 offset is click here. We're going to sell to open. Now what does that mean? That means we're going to sell the higher one, this 139 put. We're going to buy the 135 for protection. So if a stock drops below 135, obviously this put is live for us and would make up any difference in the loss. So selling this one, what we hope is that the 139 price level will be maintained, and that when this expires on August 9th, because it's above 139, these puts are worthless and we get to keep credit. Okay, so the situation that we have here is that we have that spread right here, 139, 135, and what we notice here is there's some crazy number in $758. We don't have any idea why that's there, so what we want to do is enter our own limit order. We want to get a limit of 95 cents, and notice that it's basically in a situation here between 87 and 103. Now if we pull this down and click on here, you can notice again 87 to 103, that's the bid ask, okay, and here's that midpoint that we were talking about. Now I downsized our other box, so let's come back into here and see if we can find it. Option chain vertical, there it is. Let's click on that one. And also we've got another one here somewhere in this area, profit loss calculator, multi-leg option trade, Disney, and there it comes back up again. So now we've got this situation in place. We have our 95. Now what I wanted to mention to you was that while with puts and calls, the screen actually says a limit price. The net credit limit that you're suggesting here is 95. And you could see before it was nuts. Over here was $7.50 or something. That's never going to get executed for you. So you want to make sure that you have this in place. Notice also that our max gain here is 95 cents. $95 rather, versus a max loss of 305. If you add those together, obviously that's 400, and the reason it's 400 is because there's a $4 spread. Okay, here's the tab also if you'd like to take a look at any of the charts that people use when they're analyzing, in particular for butterflies and so forth. Those would give you the regular charts that you'd like to see to estimate where your profit and loss levels would be in a visual format. Okay, so now we're going to preview this, but we're not now going to take this trade. We're simply going to say this is the situation that we've got. We can go back and adjust and make sure that all of the values we've got are right. Based upon the fact that it's a $6 commission, there's $88 worth of order value here, which isn't much obviously, but what we're trying to show you is what is the situation in terms of entering these orders. Okay, so now we're going to exit all of this, and we're going to come back. Come on now, let's go and come back to our chart and see that we have indeed begun this uplift here. And if you were to imagine now, if we'd been able to get into this maybe 2 days ago, we were in a situation where that spread could have been worth probably $1.75, maybe even $2. And you can anticipate that kind of rubber band slingshot approach as you get down into the bands and begin to think about how you want to take your trade into earnings. If you like these videos, I hope you'll subscribe to our channel and hit the bell next to it if you'd like an alert when our new material becomes available. Please come see us over at fxfortunehunter.com if you'd like some background on how we create our templates. And also our book, The Amazing Zeelander Flytrap Forex Trading System on Amazon, is a good read, especially for beginning traders who don't know much about the Forex. But it's also great for anyone trading in that it gives a full accounting of the multiple moving average systems that I use. Hope this has been helpful, guys. Please come back and see us again. And until the next video, good trading.